on, everyone? It's Jay with Trader X. I hope you're all having a great Friday, and here's another day trading recap for you guys. So today was unfortunately a pretty big red day, almost $100 red day. I was down $93, and I traded 5 different stocks. Today, without a doubt, my biggest problem was letting the emotions get the best of me, and I'll show you guys why. But if there's one takeaway from this video I want you guys to get is why being an emotional trader is not going to help you in the stock market. So first off, just by looking at these charts already, you can see I've traded way more than I usually trade. Today was definitely a case where I let the emotions get to me and I over traded. I never take this amount of trades on this amount of different stocks. I traded 5 momentum stocks, so definitely let it get to the best of me, and I'll walk through that with you right now. So the first stock I traded was ticker symbol DIDI, as you can see right there. And if I pull up the chart in my order, there it is. So this stock kind of followed my general pattern I like to trade. When the market opened up, the stock shot up. It was a top gap around my scanner over here. And it shot up to top VWAP, came back down. I tried getting in near that support at the EMA level, and unfortunately it ended up flushing me out for nothing big, about 3% stop loss with $500, right around $15. And yeah, it just didn't go my way. If I look at a big picture, I still like this pattern because I saw it making higher lows, right? The lows when it pushed up, came back down, it didn't go back to the previous lows it was at. It kind of made higher lows, and when it crossed the EMA, I thought I saw potential for this stock to be able to rally kind of above the SMA or at it, but that never happened, and that's fine. I took my small loss and I walked away. And what kind of ended up screwing me up on the day was, like, let me show you my next trade, CSSE. Both of these stocks I took, they were my first 2 trades of the day, and both of them had similar patterns, right? Pushed the middle from middle to top VWAP, came back down, and I tried buying in the dip right around here and got flushed. Both of my trades when I bought were in the red pretty much the whole time, and they both flushed me almost instantly. So it was not a great feeling off the bat of the day to start off with instant flushes, and that's definitely where I already started getting emotional. After that happened, I tried doing these little trades where I would kind of buy at a support area, and I would want to sell for a quick dip trade, right? Sell for a little pop for barely any profit. I tried again here and it ended up flushing me out going south, right? But I started getting into random trades, kind of just being like, all right, I'm already down a lot on the day. Let me just buy in for a quick pop at a dip, and I'll only give up like 2% a trade or something like that, and I'll still let it pop. And what ends up happening, if you see my other stocks, I traded all kind of similar patterns like GFI right here, GFAI, and HUSN. The losses I took are small on each, and I just decided to kind of get into random stocks, being very non-careful about my positions. I would get in, be like, I'm only gonna give up like 1.5, 2%, like you can see, and sell at a pop. And I just kind of got in and in without thinking how much, if you keep doing that and overtrade, your losses really just start to pile up. I didn't think I'd be red on all of them, and I pretty much was. And that's $8 here, $12 here, 19 here. All of a sudden, next thing you know, I was down 70 and decided to take one more trade with my actual setup, risking 4 to 5%. That put me down $93. So let me show you guys. If I pull up this ticker HUSN, this was a trade I took. This is why the pattern is not the best to do and why overtrading is not a good thing to do. The stock, I did the same thing like I was doing on the others. I decided to buy in here at the price 259 at a break above middle VWAP. As you guys can see here, this is a pretty smart place to do the setup I like to do, right? I got a break above middle VWAP. I could have bought in lightly for about 5% given myself, and at a break of resistance right around here, a higher high, averaged up and written this whole thing up. I literally bought in at the price point 259 right around here, a great buy-in, and sold for a small pop like right around here, 265, as you can see here. Very small profit, literally like from there to there. And my type of luck, the one stock I sell early ends up going huge. And the problem with my setup was, if I go in with a stock aiming to just buy in and sell for a quick pop, I need to be real with myself and realize that my risk to reward is not worth it, right? I was willing to give up like 2.5%, so where it didn't make sense for a quick pop at basically the same percentage, like 3%. That is a 1-to-1 risk to reward ratio, and that will not get you anywhere in stocks because this is just a numbers game, and you don't know when you're gonna win or lose. So make sure that when you do win, it's set up so you can win a lot more than you give back. And I did not do that, and I ended up paying the price for it, right? The stock ends up going absurd, another 23% around from where I bought and sold. So I definitely missed out because I just got greedy trying to do these little trades, and it all just added up, guys. It all piled up, and you know, I ended up taking a pretty hefty loss today, much bigger than I would have liked, and definitely I was a lot more emotional today while trading. I did things impulsively without thinking it through, and looking back on the day after I reflected, it's not a good idea to just get into trades unless they have the best quality setup so you can really execute your plan, because if you just get in trades here and there like I did, you're just gonna wanna just start getting in kind of without thinking about it, and the losses will pile up because it is possible for all of them to go south like happened to me. So yeah, guys, pretty bummy day, $93, but I don't want to let it emotionally affect me a lot, because you shouldn't let any red days affect you. One day at a time, you should take it, and don't let the emotions get the best of you. Don't be so emotionally invested in that one day where you become an emotional wreck for the future, right? Just one red day, I can shrug it off. I know I didn't perform the best and stick to my plan, so I paid the price for it, and I just need to come back better. Next time I trade, next week will be my brother, and yeah, I'm excited for it, and excited to keep working on my strategy and preventing days like this from happening for sure. So thank you guys so much for watching. If you liked the video, make sure to leave a like and subscribe, and leave a comment down below if you have any questions or comments. And yeah, make sure to check out our Instagram. We post there every day. Thank you guys so much for watching, and have a great rest of your Friday.